All right, joining me now, Mr. Hugh Hendry. Hugh, down there in St. Bart's. Okay, everybody has been talking about Japan and the carry trade, which is something you have been talking about for a very, very long time. The government finally figured out the carry trade isn't, hedge funds borrowing in Tokyo and reinvesting elsewhere. They figured out it's big Japanese companies who are, don't want to invest in Japan and moving their funds outside of the Japanese mainland. So does the fact that the government is finally starting to dial in on the carry trade, does it change your thesis at all? I know you keep saying JPY 200, JPY 200. Do you give the government any credibility here to maybe interrupt that down leg to 200?
Hi, Jeff. Dollar yen. Yeah, as you say, for the best part of 4 years, I have been trumpeting the contentious notion of 200. So yen weakness, dollar strength. And that was against the consensus. And actually, I would actually use that yen carry trade as the title for the silo of those who argued that there was a magnetic pull back to normalcy, which was 110 for dollar yen. And that as an argument, it was a secure and rather robust professional opinion on where the currency pair might go, because for the last 30 years, it would seem that has been the center of gravity, and that the dollar had appreciated largely perhaps owing to Fed and US Treasury misalignment with how they intervened to try and stimulate the moribund US economy during COVID, which then forced the Fed into a very, very rapid and aggressive tightening, which left a 500 basis point, if you will, carry trade opportunity. But with normalization and the recovery out of COVID, that normalization would bring that Fed Bank of Japan disparity much tighter, and therefore we would return to what? That's been the prevailing argument for the last 4 years. That argument is not working. The gravitational pull has rather been to the 25-year low point for the yen, or the high point for the dollar, which would be around 160, 162, and that's currently where we are. And I write a great deal on my podcast, my Substack activities, about these long hiatus that I'm trying to describe patterns that have worked very successfully for me, and pretty much putting a portfolio together of stocks and other risk assets where you're just suddenly where markets are willing to pay an all-time high, like a 10-year all-time high. We saw that in 2017 when some brave but perhaps expertly opinioned thought leaders came in and started buying NASDAQ at levels which exceeded its highs of March 2000. So they were establishing a 17-year high. That's a kind of opportunity that I would equate that to gold, I think, somewhere in that period, 2010, 2011, when I believe gold surpassed its January 1980 high. And that was roughly about 1,000. Well, that was 800, of course. And again, so NASDAQ went up 5 times and gold went up 5, 6 times. There's a lot of explosive energy when you abolish the inertia. And so bringing that back into this world of dollar yen, this 25-year, bring the chart up. It is a chart in motion that is tantalizing, that if we lose the mooring of 160, 162, really you enter into an intellectual thought process of trying to imagine 200, 250 dollar yen. Now, a lot of people we have a battle. You hear the battle, I think, constantly. We have a battle between our monkey mind and Benjamin Graham and his intelligent investor mind, that it would be so much better if everything we did, every risk-taking instance was actually backed up by chapter and verse of expert confirmation. But what I try and get out...
Hugh, you know what it is. Half the time is the price moves and we invent reasons for it afterwards.
Yeah. And you're right. And actually, the monkey mind, in the sense that when you make those breakouts, the monkey mind is like, it wants to eat a banana. It wants to get involved. And you know what? Again, from my pattern observation, more often than not, that's the right move. Don't wait. Like when it's in flow and state, go. You'll find the answer. You'll find the answer later. And sometimes I keep saying, is there really an accepted understanding for why the Dow famously peaked in October 1929 and all these other dates. There's not. So participate and then make up an excuse later. Now, as you know, I want to thank you very, very much, because I think from about late 23 or something, I've been pushing it. And I made up. I could see, I studied the work of the magnificent trader, Bruce Kavanagh, one of the giants in the global macro business, and how he allowed charts to invent realities, and then he would try and align his risk capital. So he traded dollar yen from 300 to 100. And again, his mantra was, I don't know why it's going to 100, but this train is leaving the station, if you will. But with your help, I think you and I, we took the plot point of that point. I think it was late. Was it August, September 21 when we heard of the first property default out of China?
Yeah.
With our friends. Was that 21 or it was August, September 21 or 22?
I think it was 21 when it started to get Evergrande and people, all the other ones that came up with it. Yeah.
And so, don't trust me. Anyone can bring up the dollar yen chart, but then put in those dates for the default notifications. And to my mind, that's where you see we lose 110. The yen begins to weaken, we lose 110, and we start this to higher the value of the dollar. And if using your extensive work, I made up an answer, which was that I related the fact that weakness and woe, great economic woe out of mainland China, that the event that I had been petrified about for 12 years was finally coming to pass. And as it came to pass, we could not dismiss the fact that the yen would weaken. And so using your analysis, the conjecture was that quantitative easing, that Japan was the first nation to embrace quantitative easing. And I try and deal with irony and paradox when I try and communicate with the universe, when I try and imagine tomorrow. And what I think you would agree that QE was an intellectual piece of propaganda, which was designed to make banks take more risk. So how could we say that cutely? And we don't need to say that cutely, but it was a
no, that was it. That's exactly it. Is QE? How do we get banks to do something? And let's just throw some shit at the wall and see what sticks.
Yeah, and essentially, we want you to be irresponsible again. Oops,
that was Krugman's term. It was, we want you to be incredibly promised to be irresponsible.
Incredible, indeed, and we could. I hope we can return to that. And so it was like, hey, here's candy, lots of candy, or alcohol if you want to use the adolescent kind of, the kids being left and the parents go away for the weekend. They leave them, with a bar full of alcohol. That was quantitative easing, except the psychology of the banks was, they could not be teased to misbehave. And again, I'm trying, because the vernacular that we use, Jeff, is off-putting to, the general intelligent person in the street. But banks, QE would involve, selling, I guess, their JGBs to the Bank of Japan, and in return they receive cash. And cash, again, is one of these mystical terms, but cash is an instrument where the assigned probability that you are going to record a paper loss on the value of that asset over any 3-month period is zero, or is near damn zero as you can get. Would you agree with that?
That's exactly the point.
That's exactly, yeah. And so the quantitative easing or the candy alcohol metaphor is the accumulation of this candy, this cash. And that cash took the form of kind of overnight or 3-month JGB cash bills. Again, would you agree with that?
Yep.
Yeah. And for the longest time, banks are like, I am not touching it. I am not touching it. That candy is evil. When I eat too much candy, I go crazy. I'm not doing it. But of course, it's been what, 26 years? Did they invent or begin the QE journey in the year 2000?
March 2001.
So 25 years is a lot of temptation. And so I think, again,
you know how good it is? Huge. It just celebrated 25 years this year and nobody knew it. That's how good QE was. There was no parades, no fireworks, no nothing.
Yeah. But in the background, banks were getting reckless again. So the conjecture, presumption, take me down, if you will, to the people who tell me we're going back to 110. But a bank in Japan finally said, you know what? a banker said, I'll get paid more money if I make money. I still don't want to touch domestic Japan, toxic, but I'm going to take this cash into my counterparty at their window and transfer it for dollars. And of course, because you had yield curve control, etc., the probability of any 1 day, 3 month period that you're going to have a price loss on a JGB cash bill was zero. So you want dollars? No haircut. Yeah, once you get the dollars, we live in a dollar world, you've got dollar collateral, and you can create a P&L by taking risk. And the presumption was that funded mainland China risk. And therefore, as the defaults began to appear, the notion that JGB cash overnight was as safe every day for 4 years, it's been death by 1,000 little pinpricks. And that's, I think, where we continue to be. That may be complete nonsense, because what I'm saying to you is that day by day I think the banking counterparties to Japan's sector recognize that they have an involvement. And maybe it's global risk taking, but it's an involvement where to keep that line of credit, they have to pony up more and more of their own dollars. And of course, that makes them have to sell yen assets to buy. And that's currently where we are. Now, what's your take on that, or how would you extend that?
No, that's exactly where I think it's been going. And it's funny how the officials in Tokyo, whether it be the Bank of Japan, like, hey, we'll fix this by raising rates. And they fix it by raising rates, which has destabilized the JGB market, which has made Japan even less attractive for big institutions to invest in, which is paradoxically, and you love paradoxes, the rate hikes in Japan are actually leading to a weaker yen. So the more the Bank of Japan hikes rates, the more money flees from Japan and goes someplace else. It's one of those things where it's when everything is lined up in that direction and nobody knows, nobody in official position of authority knows what they're doing. It's like there's no way to get out of it. They're very lucky if they can just keep it stable or keep it steady.